My role at Centuria Capital is Head of Real Estate and Funds Management. So I mainly oversee the $4.6 billion of assets we have in both our listed and our unlisted property funds. And I work closely with our transactions team to analyse and acquire assets, and with our distribution and funds management teams working with our investor clients. Look, some of the key property themes we're seeing at the moment is continued strength in the commercial and industrial markets, particularly in Sydney and Melbourne. So Sydney's been driven by infrastructure throughout the state, so the West Connects and the Metro Rail, and Melbourne's been driven by high population growth. Brisbane and Perth are a little bit different. They have a strong tenant base dedicated to the mining industry, and when the mining downturn occurred a few years ago, we've seen demand come off. But in the last 6 to 12 months, we've seen their vacancy rates decline, and a lot of the big mining users actually take sublease space off the market as they gear up for improved conditions. Canberra and Adelaide have high headline vacancy rates, but when you break it down, it's actually a lot more positive. So the high quality assets have very low vacancy, but the more older assets, obsolete assets, have high vacancy, so they distort the overall measure. We're also seeing a lot of demand from investors in the space, so looking for high quality commercial and industrial assets. So we have all the onshore groups, so the REITs, the high net worths, the family offices and the wholesale funds, but then offshore, where the Chinese mainland were big buyers 3, 4, 5 years ago, they've dropped away, but the buyers from Hong Kong, Japan and Singapore have really taken up their space. Look, our outlook for industrial and commercial property going forward is for another very strong year. All the major banks' forecasters have interest rates staying low throughout the year, which definitely helps the real estate sector. Commercial leasing in Sydney and Melbourne has been extremely strong, probably the strongest I've seen it in 20 years, which bodes well for continued rental growth going forward. In the industrial sector has been a standout, so there's been a lot of strength there. We've had huge demand by offshore and onshore investors. A new group that's come into that space has been the private equity industry. So Blackstone has been one of the largest buyers of industrial assets in the market for the last 2 or 3 years. And this has driven down cap rates to historical lows in the industrial market. So overall, we expect a very strong 2019. The IPD PCA index rates all the unlisted funds in the sector, and we've had 6 out of the top 10 for the last 6 quarters. And in the last 2 quarters, we've had 1 to 5 as well. So you don't get much better performance on the unlisted side. On the listed side, we've got the 2 REITs with CMA that's had some really strong NTA growth, and we've really been transforming that portfolio. So we've been selling off the 2 industrial assets we've got in the portfolio and also selling down some of the smaller assets. And very recently we just bought the Hines portfolio, which was $520 million portfolio for very high quality office assets, and that's just transformed that portfolio into a very high quality office sector specific REIT. So at the moment, we're the largest metropolitan office REIT on the ASX, and once Investor Office Funds gets taken off the boards as it's going through a buyout, we'll be the largest office REIT on the index as well. CIP, which is our industrial REIT, that's had great share price growth. It's returning about a 6.5% income yield, and that's $1.1 billion of high quality industrial assets. Look, Centuria's main investment philosophy is that we're asset-specific buyers. So if we identify an asset where we think we can make money for our investors, then we're a buyer of that asset. We also like buying assets that might have issues, so that we can get a discount on the purchase price of that asset if there's something there we think we can fix. So something like vacancy. So we really back ourselves to lease up vacancy in assets, and it's definitely one of Centuria's key strengths. One of the other things that diversifies us from others is we also like to manage our assets internally. So where a lot of our competitors would outsource the facilities management, property management, and maybe the asset management, we have all that in-house, and we believe we get better results from that.